Ready to unlock a clear picture of your company's financial health using nothing but a trial balance. First, grab your trial balance. This is a list of all your company's accounts and their balances, neatly separated into debits and credits. We will now sift through the trial balance to find the revenues accounts, which shows the total amount of sales generated during a specific period. Next, let's move on to cost of goods sold. If applicable, this represents the direct costs associated with producing the goods or services your company sells. Now, subtract the cost of goods sold from your revenue to calculate your gross profit. This is a quick look at your profitability before considering other operating expenses. Operating expenses are all the other costs of running your business, such as salaries, rent, and utilities. Now find these accounts and list the figures. Now deduct total operating expenses from your gross profit. What's left is your operating income, which reflects your profits from core business activities. Next, identify any non-operating items like interest, income, or expense. Add these two or subtract them from operating income to arrive at your income before taxes. Finally, subtract income tax expense to get to the bottom line, net income. This is your company's profit after all expenses and taxes have been paid. And there you have it. You've successfully created an income statement directly from your trial balance, giving you a clear view of your company's financial performance.